Welcome to week 31. 31 weeks we've been at this. Oh, Lord. And I want to welcome you all in. If you've never been here before, come on in, have a seat, don't touch nothing. But if you are coming back, thank you for coming back to us for week 31. And so tonight we're going to dive into a topic that every buyer and every seller needs to know, and that is navigating Texas real estate closings. So whether you're getting ready to purchase your very first home, if you're upgrading homes, or if you're investing in Texas real estate, period, the closing process can feel like a lot of moving parts, but don't you worry, because in this webinar, today's webinar, I'm going to break down the complete step-by-step roadmap to title insurance, escrow operations, and smooth residential settlements under Texas law, so you can walk up to the closing table with 100% confidence. Now, I want us to start with who I am. In case you don't know me, I'm Daphne Brown, the broker owner of Beyond the Home Realty, located right here in Rocheron, Texas, in Brazoria County. And, there are so many individuals who have so many real estate questions, whether they're selling for the first time, purchasing for the first time, thinking about investing, or I don't even know. I'm just trying to figure it out, right? We wanted to put together a series that addresses a lot of the questions that we have gotten over the years from people. And as these questions change, we are changing with them and going ahead and putting together a webinar that's packed with so much useful information, and we hope that it will be helpful to you guys. Now, we have covered in this webinar everything from how to save for a home, how to budget for a home. We've talked about loan types. We've talked about lenders, the importance of your lender and your realtor getting along and being able to communicate. We've talked about the whole entire team, from the realtor to the lender, to the title company, to the appraiser, to the inspection company. We talked about all of that. We've talked about what happens if your appraisal comes in low. We've talked about how to make offers if you are a buyer, and as a seller, we've talked about how to present your home on the market, how to go about navigating those offers once you get them. Oh my God, we've talked about a lot. And if you want to see any of those videos, we do have them on our YouTube channel, and they are in a playlist. So check those out there. So now let's get back to today's topic, and we want to start with a high-level view of how a Texas transaction actually flows, right? Now, first, everything kicks off with the contract execution. Once both the buyer and the seller sign that contract, your official closing countdown begins, along with your option period. And so right out of the gate, your earnest money and option fee must be deposited at the title company, because here in Texas, we use title companies. And so in Texas, that's a strict 3-day statutory deadline to get those funds in. So time is of the essence, and timing is critical. Next, the title company steps in and starts doing their job. So they're going to be doing everything from the title search to title commitment. They are going to run a deep check on public records to make sure that property has clear ownership and that that seller has the ability to sell it. And then finally, we reach the final statement. This is closing day. Yay, spear fingers. And this is when you are able to sign those legally binding deeds. This is when you are able to review your loan disclosures at title. Of course, you'll have time to do those before you get to title, and we'll talk about that in a minute. And this is the time that the title company will disperse all the funds so you can cross the finish line. All right. So if you're a seller, it's a good day, because it means more than likely when they're dispersing those funds, cha-ching, you got money going into your account. All right. All right. So now phase one, let's break down phase one. That is title search and examination. Think of this phase as uncovering any surprises before you take ownership. All right. There are 3 key title safeguards here. The title search, where the title company examines county property records to check for past tax liens, open mortgages, any unpaid contractor claims, or any judgment liens. And then there's the property survey. This visually maps out exact lot lines, fences, setback lines, and this makes sure there aren't any unrecorded encroachments, like a neighbor's shed sitting over on your property line, like a pool that's been put there, like a tree that's kind of leaning over on your side. If it's something that's temporary and it's on your property line or on the encroaching the property line that you are thinking about purchasing, if it's temporary, that's an easy fix. If it's something that's permanent, that's going to be a little bit more difficult. But that is where the survey comes in, and that's why it's so useful. And then the third key is going to be the title commitment. This is the official document outlining schedules A through D, and it shows you who owns the property, what needs to be fixed before closing, and what exactly the policy will cover. Now, let's move on to title insurance protection, and I want to clear up a huge misconception about title insurance here in Texas. In our state, title insurance rates are strictly regulated and promulgated by the Texas Department of Insurance, TDI. What that means for you is it means the base premium cost for title insurance is legally the exact same no matter who you choose, no matter what title company you choose, okay? And there are two main title policies. There's the owner title policies, which protects the home buyer's equity against hidden past title issues. And then there's the lender policy, which protects the mortgage company's financial interest. If you are wondering how long this all takes, that's a good question. You should want to know that. Well, when you receive a contract as a seller, when you're writing a contract as a buyer, and they ask you like, okay, when do you want to close? Typically, that's 30 to 45 days. Sometimes, in some cases, it could be longer, specifically if you are purchasing new construction, right? But typically, it's 30 to 45 days. And I have had closings that have closed in 14 days, but that's not typical, right? So that's why we're saying typically it's 30 to 45 days. If we bust that down to a 4-week timeline, let's show you what that looks like. In week 1 is going to be where you open escrow. So earnest money is delivered, receipts are issued, and home inspections take place during this period because it's also the option period. Week 2 typically flows like this. That's when the title work and the appraisal is ordered. If I'm representing a buyer, I don't have the appraisal greenlit until we've worked through those inspection findings, okay? On the flip side, if I'm representing the seller, I'm like, hey, when is that appraisal going to be ordered and when is it due back? But that typically happens in week 2, where the property survey is ordered, the title search is conducted, and the preliminary commitment is issued, and then the appraisal is performed somewhere in this. Now, this is not exact to science, but it kind of gives you an idea of the play. And then in week 3 is when underwriting occurs, where the lender completes the underwriting for the buyer for the buyer's loan to make sure that all of those loan conditions are satisfied. Any title issues that there may have been in Schedule C of the commitment, they're cleared up here, and then home insurance is bound, and we secure the official clear to close. That's in a perfect transaction. Sometimes that clear to close may not come until week 4. We know that, but typically this is how it is conducted. In week 4, that's when the closing happens, okay? You review your closing disclosure, you wire the funds. When I say you, I'm speaking from a buyer's perspective, and then you sign all the documents and funds are dispersed, okay? So at closing, your title company is going to be responsible. That's one of the jobs of title, and we talked about that in detail last week. But the title company disperses those funds, and then that tells everybody who's receiving a check that your money should be in your account soon, right? But before we get to that, I'll get to more about that in a second. Let's back up a little bit. One rule you absolutely must remember is the TREC 3-day rule. Federal regulations require that home buyers receive and review their final closing disclosure, or sometimes we call it a CD, at least 3 mandatory business days before closing. This waiting period is put in place for your protection, for a buyer's protection. And it gives you dedicated time to check the interest rate, the final loan costs, and the exact cash to close amount without feeling rushed at the signing table. So it is a protective measure for buyers. Here's how standard closing fees are typically allocated. The owner's title policy, this is highly negotiable. But in standard Texas practice, the seller typically covers this cost for the buyer. Now, during the pandemic, when sellers were getting everything, buyers were giving them everything they wanted and their kids. Okay, you want my firstborn, you can have them. They were doing everything. And buyers were paying everything. Sellers never really had to pay anything. But typically in a regular market, the seller will pay that. In terms of the lender's title policy, that's 100% a buyer's expense. After all, they're the ones getting the loan for the property. For the escrow settlement fee, customarily, that is split 50-50 between the seller and the buyer. And then on the property taxes, that is prorated. So the seller gets debited for taxes from January 1st up until the day of closing, and the buyer receives a credit for those taxes on the credit side. So they'll be charged, but then there'll be a seller credit as well. Okay. And that covers that. So then at the end of the year, when that bill comes, the seller has already given the buyer their portion. For the recording fees, the buyer pays to record their new deed of trust, and the seller pays to record their deed releases. Now let's talk about the average buyer closing cost distribution, because we get this a lot. Buyers want to know how much should they budget for closing. So in Texas, buyer closing costs generally average between 2% to 4% of that total purchase price. And so as you can see from this chart, prepaids and property tax escrows make up the largest chunk of about 42%. And then the lender origination fees come in around 28%, and then title and escrow services take up about 20%, and then the rest, the 10%, is going to be for surveys and inspections. It's going to account for the additional 10%. I will tell you that this is considered, again, closing costs. So buyers always want to know, what are my closing costs, right? And you have to understand that sometimes people use closing costs and down payment interchangeably, and it's not the same. So your down payment is going to be the down payment for you to acquire the loan, plus your closing costs equals your cash to close. So let's just say, for the sake of easy math, let's say you were purchasing a home that is $300,000. So let's say you were getting a $300,000 home, and you had to put down 3.5% for the loan, for your FHA loan. That will be 10,500. So $10,500 is going to be your down payment, plus whatever these closing costs are is going to equal your cash to close. Now, when we are asking for seller concessions or builder concessions, or seller credits or builder credits, and let's say they give us $15,000. Well, that goes first to the closing costs. And then from there, if there's anything left over, you can use what's left over to buy down your rate, if that's applicable. But that is typically how the closing costs go. Okay. All right. So now that we've done all that, now that we know what our cash to close is, now it's time to close. So now what do we do? What do we bring to closing day? So this is your closing day execution checklist. So when your closing day arrives, the essential items that you must bring and complete, you must have a valid government photo ID. It cannot be expired. It can also be a passport, but it cannot be expired, okay? So valid driver's license or valid passport. And remember, Texas is a homestead state. So if you're married, your spouse usually needs to sign documents too, even if they aren't on the mortgage loan. I would suggest having that conversation prior to, so you're not trying to find this out the day before. And then your certified wire transfer, always call your title officer, your title company directly using a verified phone number so that you can confirm wire instructions before sending any wire funds, because wire fraud is real. So you want to double check everything. And then your homeowner's insurance binder, typically this has already been done with your lender, so they can balance those numbers. So that will already have been done. And then you want to make sure that you've done your final walkthrough. Now, I always try to do with my buyers the final walkthrough 24 to 48 hours in advance. Okay. So get that done so that you can ensure that the agreed upon repairs have been made, and so that the home is presented in a way that you have agreed to receive it. Now, it's important to understand the role of the title company during all of this, because they're a main character at this point. The title company, though, they're not on the side of the buyer or the seller or the buyer's agent or the listing agent or the lender, the mortgage. They're not doing any of that. They're an impartial, neutral third party that does not take sides. Remember, we talked about that last week. So the title company holds all of the earnest money, the loan proceeds, and legal deeds safely in a trust until every single term of the contract has been met. Once everything is signed and funded, they record the new deed at the county clerk's office, and then they disperse the proceeds to the seller and anybody else that needs to be paid, agents, whatever. All right. Now let's talk about the top questions that we get from buyers and sellers, questions that we've gotten throughout our time in doing real estate. And then some of these questions, I think 3 or 4 of them are current questions that we received. So we're going to go ahead and answer those. Question number 1, if a title search was already done before closing, why do I still need to buy an owner's policy? And the answer is simple. That search only catches what is currently written in public records. It won't protect a buyer against hidden risks like a forged signature from years ago, a missing heir who suddenly claims ownership now, or an unrecorded lien. An owner's title policy protects the buyer's financial equity against those hidden past surprises for as long as they own the home. Question 2, what happens if the closing disclosure numbers change on closing day? Minor tweaks like minor prepaid interest adjustments can usually be handled very quickly, very easily. But under TREC rules, if there's a significant change to the loan APR, the interest rate, the fee structure, any of those things, then it will trigger a mandatory new 3-day waiting period, which is going to push back the closing date. All right. Always have that conversation with your realtor and your lender if that pops up. Question number 3, can I bring a personal check to closing for my cash to close? Now, believe it or not, bless his heart, I had a buyer ask me if he could just bring the cash or if he could just Venmo it to the title company. It don't work that way. No, ma'am, Pam, okay? So in Texas, all title companies, okay, will require the buyer to bring certified funds or have a wire sent to them, okay? So certified funds or arrange for a bank wire. Question number 4, if I sign all my documents at 10, can I get my keys right away? And in short, not quite, okay? So there are some things that need to occur before you get the keys. The loan has all of the paperwork that you're signing, the title company has to send that back to the lender, and the lender has to go through each of those documents and make sure that they're signed before they give them the okay, the thumbs up, the authorization to release those funds. And once the funds have been released, then the keys can be officially released to you. I will tell you, I always caution people. I know everybody can't do it, but let me tell you what I don't like. I don't like end of the month closings, and I don't like late afternoon closings on Friday, because I have been a part of transactions where my buyer did not get the keys until that Monday. It hasn't happened often, but it has happened. Okay. So if you are going to be closing at the end of the month, if you are going to be closing on a Friday, hopefully Friday doesn't land on, well, sometimes it will. Friday sometimes is the last day of the month. Try to close as early as possible during the day. All right, and those are the buyer questions, at least the top buyer questions. Let's get to some seller questions. Do I have to pay for a new survey if I can't find my old one? And under paragraph 6C of the standard TREC contract, if you don't provide an existing survey along with a signed T47 affidavit within the agreed upon time frame, the time that was agreed upon in your contract, then a new survey gets ordered at your expense, Mr. Seller. Okay, remember these are seller questions. So unless you already know during the listing process, I don't have the survey. If that is the case, then tell your listing agent, listen, I don't have a survey and I ain't buying a new one. And so they'll put in the instructions for an offer that if a buyer requires a new survey, the buyer needs to incur that expense. All right. But if you, Mr. or Mrs. Seller, can locate that original survey, go ahead and do it as soon as you can, because if you tell them you have it, okay, and it's written into the contract that way, then if you don't have it to them in a required number of days, then a new survey has to be ordered and it is on the seller to pay for it, okay? All right, question 2. If my ex-spouse's name is on the original deed, do they really need to sign at closing, even if the divorce decree gave me the house? And yes, 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 and yes, because remember, we're in Texas, and Texas is a community property state. So to clear the title 100%, the title company will need the ex-spouse to execute a conveyance document like a special warranty deed. And that properly releases their legal interest on public record. Now, if y'all can't stand each other, okay, if the divorce was contentious, there can be arrangements made where that ex-spouse can sign even before the closing date occurs. They can send a notary to them, or, you know, other arrangements can be made to make sure y'all don't meet up at the same time and, you know, the cops have to be called to the title company. All right. All right. How and when do I get my net proceeds after closing? So once the buyer's lender funds the deal and title disperses the funds, your proceeds, Mr. or Mrs. Seller, are released. If funding happens before the daily wire cutoff, your money usually posts to your bank account the same day or the next business morning. All right. So this is, again, why I like to close in the morning. I do not like afternoon closings, especially, again, if it's on a Friday or if it is towards the end of the month. All right. And then question number 4, when should I cancel my homeowner's insurance and utility services? Woo! I love this question because this question is one that continues to come up. Sellers ask this question all the time, and I tell them to keep everything active through the actual funding date, not just the day that you sign. If funding gets delayed by a day, the seller remains legally responsible for that property until the transfer is officially completed and funded. So that is your answer. I know there are some sellers who like, well, we're under contract and we're supposed to close on the 10th. I already called the utility companies and I already canceled my insurance and they're already, you know, please don't do that, because again, that home is still legally yours until the transaction is what? Completed and funded. So please make sure that you are abiding by that answer to that question, because it's big. So that is it for today. 26 minutes. Yes, that is it for today. Remember that we're going to take this video, I'm going to chop it up, and we're going to have this available for rollout on Sunday. If you have any questions, if you want to see any past webinars, again, I will have a playlist at the end of this video. And please remember that you can drop down in the comment section, ask us any questions, or you can DM us, or you can text us, or you can email us, or you can even call us. And we'll try to include those questions in our future webinars. But for all of your real estate needs, I want to remind you that the homegirls are always ready and willing to enable you to find your way home. Till next week, guys. Bye-bye.
Just pulled up to the house, don't feel like getting out. I'ma just lay back and cry.